Brian Proffitt with Future Home Loans, where your future is bright. I'm here today with Danyus with Exit Real Estate Gallery, and also our special guest, Nick Behrman, CPA. Thank you.
Hi, folks.
All right, Nick, thanks for being with us today. And then first question, how did you come to Jacksonville? And then also, how did you get into your profession as a CPA?
All right. Well, I came to Jacksonville in 2007 after I graduated with a accounting degree from University of Central Florida in Orlando. The purpose I came to Jacksonville was to go to University of North Florida for Masters of Accountancy. And took me about a few years to graduate, get the Masters of Accountancy. After that, I studied for the CPA exam, and I started working in the profession in 2011. Worked three local firms in the area. And in 2020, I started my own practice, Absolute Value Accounting Services.
What was your interest in taxes and accounting? What was your interest that got you heading in that direction?
Well, when I took my first accounting class, I became fascinated with the subject matter in general. It was kind of a love at first sight thing. And after I took that class that particular semester, I decided that I was going to pursue it. It took longer than expected, but eventually the goal was reached.
Go ahead, Ryan.
Awesome. Fellow UNF grad as well. I think I might have taken the accounting class twice, maybe the first time, but I know the pain going through there. So what are some of the advantages of owning your real estate, being a CPA?
All right. Well, I'm going to cover the personal side first. You get to, of course, itemize the mortgage, interest, and property taxes. However, since the Tax Cuts and Jobs Act of 2017, those benefits have been substantially reduced because the standard deduction increased up to in 2021, it's going to be $12,550 if you're single, or $25,100 if you're a married couple. So many people, that's more than the mortgage and taxes they pay, so they don't really get to take advantage of that anymore. Also, need to keep in mind that in 2017, any home or initiated mortgage purchase has a $750,000. The balance of the mortgage is $750,000 plus. That deduction gets limited. However, if the home or mortgage was initiated before 2017, that limit is $1 million, and that also counts on refinancing. On the rental property side, if you have an adjusted gross income of $100,000 or less, you get to deduct up to $25,000 of loss toward your ordinary income. And that starts to phase out from $100,000 and one up to $150,000. And if the taxpayer falls to that category, unfortunately, the passive loss will be suspended until they either A, have passive income to net it against, or B, they sell the property. And then I also want to cover vacation rentals, that a lot of people are taking advantage of those. Those are prorated on personal versus rental use days. And yeah, you can take advantage of using deductions toward having, personal property for vacation rental property for recreational purposes. They could be a lot of fun depending on where they're located.